Hey everybody, I hope you're all well. It's Monday, I believe the 11th of May 2020, and welcome to another episode of EGIL.TRADE, brought to you by the Let's Talk Crypto podcast and proudly sponsored by cryptofish.com. As you can see behind me, cryptofish.com is a platform easy to use, for a non-custodial platform to buy, sell, exchange, send and earn Bitcoin and other top cryptocurrencies using debit card, credit card, ACH, SEPA, UK bank transfer, wires coming soon, so is Poly, and so is Ideal Payments. There's also a learning section where you can go learn about Bitcoin. There's a free video learning portal. Go check it out. I don't want to delay any further. Let's jump straight into the most relevant thing of today, and that is there's only 7 hours, 3 minutes and 40 seconds left until the Bitcoin block reward halving, where it's going to drop from 12.5 Bitcoins down to 6.25 Bitcoins every 10 minutes that are released onto the Bitcoin network. Why is that important? Well, the inflation rate will be dropping from 3.64% down to 1.8%. So that's pretty cool. It's something that happens every approximately 4 years, and everybody in the Bitcoin space gets together and what counts down as it approaches towards that event. Will it have an effect on price? Well, I would argue that it already has an effect on price, and it probably will affect price in the months to come. Perhaps we have a little bit of a dump afterwards as people profit take. Who knows? Although history may rhyme, it doesn't necessarily repeat exactly as it's done before. So let's keep an eye on that. It's a fundamental event, could be priced in. Everybody knows about it. Let's see. As you can see up behind me, I've got the sea of green with the odd red here and there for some of the altcoins, but we're not really worried about them. Bitcoin's the one that we're watching, up 3.92% day on day. Dominance is up 67.91%. That's good. And right, now let's jump straight into the charts, guys. Don't want to delay. Let's get to the meats and potatoes of this thing. I've actually got a 12-hour chart up here right now. I usually start off with a monthly, but we'll work our way back up to that. What am I watching here? I'm watching this beautiful rejection, or the holding of the 55 EMA here. Nice long wicks to the bottom side. Again, another nice long wick to the upside. We've retaken the 30 SMA, which I think is very significant, and we're challenging the 21 EMA as we speak right now. Why is this relevant? Well, we've got a 12-hour golden cross. We've basically pumped up. We've come back and tested back towards the golden cross, and so far it's held. And in fact, if we go back onto even lower time frames, which I don't like to do, but let's look at the 1 hour. We've got the etchings or the beginning of an uptrend starting here. If we go back to the 12-hour, let's throw on our order blocks and our liquid zones. You'll also see that this liquid zone I had down here, which I was speaking for the last 2 weeks. The last 2 weeks I've been saying my dream buy would be somewhere between 78 and 81. Unfortunately, if you remember and you watched the previous episode, I was sleeping when this dump happened, and I missed all the action in this liquid zone down here. However, we did come back down, and I did say I would take a trade, and what I've done is I've started a separate little streaming account here. So that you can verify. I don't just say, oh look, these are the charts, I would buy here, I would do this, I would do that. I've started a streaming account. Here it is. It's on Deribit. You'll find a link, an affiliate link down in the description below. And as you can see, I didn't manage to get the very low, but when we did sweep down, I wasn't at my computer. My alarm bells went off. I rushed back to my computer and I managed to get in at 8,448. Currently sitting at nothing crazy. 0.05 Bitcoin profit, 10,000 contracts. Nothing major, but just to show you that I practice what I preach, doing exactly what I say. Well, if I'm awake, I'll do what I say. But in any event, so what I've decided to do is that when I do take trades and that, what I'll do is I'll share it with you on the recording so that you can see that I'm not just talking nonsense or anything. I'm actually taking trades, taking positions based on the things that I'm saying. All right, back to the charts. Right here on the 12-hour time frame, as I said, we've got the 12-hour golden cross, which is looking good right now. You can see my yearly open down at 2020. I was kind of hoping, deep down inside, that if we did break down the 78 area, which I wasn't thinking would happen, I really did think we might get a little bit of a bounce off the 78 to 81 area, and we did. We hit 81. We've had a bounce. I don't know how much longer it will go for, but things are looking promising. I think that's the best way I can put it. And I'm sort of I'm optimistic. I like to use the word optimistic because it's not definitive. It just means that I think things are going to go well from this point here. I am watching here that we have found a bit of resistance around the 21 EMA, but also we've dipped back into this pocket of resistance up here, this little liquid zone up here, which did offer resistance. You can see on the 12-hour time frame, up, down, and then we once we got into it, we managed to break through. Yeah, that does look like a bit of a bull trap up there, but anyway, we've broken straight back down through, and I did say on previous episode that we might find that we will accumulate down here and get one of those famous crypto patterns called the BART pattern. Now, you don't normally use that terminology in normal trading, but in the cryptocurrency land, they make up nice flowery language and it just makes it more fun and entertaining. But anyway, as you can see here, a little bit of reaccumulation, and now we're testing up against these EMAs here, even on a 4-hour time frame. I am pretty neutral on whether we break through here now and just march on higher. I think that we could grind this area out a little bit here, this little bit of area of resistance. As you can see, even on a 4-hour time frame, on previous escapades in this area, we've had to grind it out and accumulate and then break through. However, we do have the fundamental event today of the Bitcoin halving. And we might just see some extraordinary moves as the market movers take advantage of this fundamental event. As you can see now, guys, we're sitting here with 10,000 contracts. I probably will just hang on to this for the time being. I want to see how we react to the sort of 92 area, 92 to 93. And why am I saying that? Well, I'm actually looking at this line over here. If we can, I mean, that's the more conservative line. If we can break and close candles above the 93.27 area, then I'll probably add on long and ride this up back to probably where the CME gap was, which I think was around about 90. Let's have a quick look. Yeah, if we look here, CME gap is at 98. Call it if I round it off. So I do have an alarm set there. If we do reach that and I'm not at my station, then it'll alert me, and I'll probably look to see how that reacts there and maybe cover myself to see a little bit of a pullback. But again, we do have a fundamental event today, so you never know what could happen. Right, let's go back to how I normally start, guys. This is how I normally do my charts. I mark out very high level time frames, opens and closes. And what did I do? I actually did this on a 12-month. I'm using Bitstamp here because it's got a bit more price history, and doesn't that look strange? And you'll see that I've got all my opens of the years marked out. For some reason, some of them have disappeared. I'm not sure why. I'm on the wrong chart, guys. So let's go back here. Here we are. Right, let's go back to the monthly chart. This has been stamped, makes much more sense. It's got much more price history. As you can see, I've got all the yearly opens tagged out. I just like to see how price reacts to those areas, and I tend to find that they do come back and test around those regions. And as you'll see, we did the same we tested back to the yearly open of 2018. We've come back to the yearly open of 2019. We've absolutely smashed right through 2020. I don't know if we'll come back and test it again, but I've got it marked out so that I can watch things. Again, we take it level by level. If we do break down below the supports that we have here on lower time frames, which I'll bring up in a minute, then perhaps we do come back to the 2020 year open. But right now, I'm still leaning bullish. We are on the halving, and I'm not halving just because of the I'm not bullish just getting it all mixed up. I'm not just bullish because of the halving. I'm bullish because of the price action I see before me, and I think that we are still healthily marching up here. A little bit of indecision here on this wick. I don't like this long wick here that sent us all the way back down and for a closure around about 87 on the weekly. But I mean, it could be argued that we've come back and tested these EMAs down here, and now we've opened up here and we are marching up. I do believe that there is an opportunity here if we do start to close weekly candles above this area up here, and I've got it marked out as a liquid zone here, and then I think we're going to be probably challenging the 11,000, 12,000 area. But first things first, we need to close above this little liquid zone here, which has offered support and resistance over the last several months, and back as far as 2019. You'll see that it was a resistance here, acted as support, broke through, confirmed as resistance again, broke through, swing pattern failure, a little bit of a bull trap, come down, people looking for a higher low, didn't get it, got smashed down. And we regained the 200 SMA and the 200 EMA, and we've been staircasing this thing all the way back up, regaining that weekly 21. I do remember we had a video back then on that week, and that was highly significant for me over here. And then now this liquid zone is being tested. It's rejected the first time around, and I have a feeling that we are going to make a valiant attempt. Well, we already have. We've already been rejected off it again. But, you know, the week is still young. We're only a Monday. Lots of price action can be built into this candle. And I remain positive for now. On the two-day time frame, as you can see, the golden cross is confirmed. We've already got another closure. So we've got a golden cross that could be played out here. And in the past, golden crosses have led to double-digit percentage increases, if not triple-digit over time. And all I see here is that we've come back down and tested this area here, especially coming back down to the 21 EMA. It's not unusual to pull into the EMAs once you have a death or a golden cross, and we've come back and we've reacted nicely so far off this cross here. And I do believe we've got a closure today. Yes, we do. So if we close this candle in this formation like this, I remain bullish, and I do have a feeling that we might even close it in a better posture than this. But with this long wick to the downside, the reaction off the 21, I remain bullish off that. Other things I am watching and keeping a close eye on is we have got a down cross on the 2-day Stokes. It's just something to see. It does look like we're testing down to the EMA. This is not closed yet. This isn't closed. Perhaps by the time the 2-day closes, we'll see a bounce off this EMA. Just suppose. I'm not saying we will. One thing I am keeping an eye on, and I hate taking trades against the 12-hour Stokes, but I have full disclosure, and I have shown you, even though these Stokes are pointing down, just because there's a lot of other bullish things that I can see, and it could lead like a house of cards or like a domino effect to this turning around on the next indicator. Now, Eric Cran has got a beautiful indicator that he uses from somebody who makes great indicators on TradingView. His name's Ballypaw, and he can actually tell at what price point we need to close above to swing this around. So I'm not sure what it is, but based on that, I have taken a trade anticipating that we might get that cross up and try and challenge higher. If we can close above this 21 EMA on a 12-hour time frame, I would immediately expect us to challenge the 9,327 area, and we'll see how it reacts there. Because if we do start closing candles above the 9,327 area, I do think we're going to go up and challenge the 98 to 99 area, and then that's when things get really, really, really interesting. Other things that I am watching, if we just go down to the 10-hour time frame, you can see that I often look at the 10-hour time frame when I'm unsure about the 12-hour. Perhaps it's a bit of a leading indicator for me in terms of what the 12-hour time frame might be doing or might be up to, what the market movers are thinking. And what I do like here is we have, on a closing basis, held above this wick low down here. The 12-hour Stokes are sort of getting down there. What I would like to see at this point, because you can actually see a little bit of a trend line forming here on the 10-hour, and I don't know how many people actually look at the 10-hour time frame. But as I said, I try to look at it because it sometimes gives me a bit of insight on the 12-hour time frame, and 12-hour time frame is one of the most important time frames that I like to look at on the lower end of the scale. I very rarely go down to a 4-hour or 1 hour, but when I do go there, it's mainly just to pinpoint the timing of my trade. I've already made a decision. I've already got my bias on whether things are going up or down. And as you can see, there's a bit of a trend line forming here. And remember, this 10 hour is not closed yet, so we could see this bounce off here. If I do see that, because it will close before the 12-hour, it might just offer a little bit of insight onto what I should be doing next. All right, guys, that's about it in terms of what I'm watching on the charts. I remain bullish, although I'm looking at this right now. It's a healthy rejection of the 10 SMA and the 21 here on the 10 hour. Who knows what will happen next? But with this golden cross on the 12 hour rejecting and the 55 acting as support as it is right now, I do remain bullish. I will flip my bias if we start to close below this 55 here, sitting at 8355. If we close even a 4 hour below that, I will flip. I'll potentially flip, and I'll start looking for covers or for longs. Run about the 200 EMA on the 12-hour time frame. That's how I'm basing my trades. I'm still sitting in a trade right now, as I showed you. One last thing which I forgot to mention is that Crypto fear and greed index has ticked back down again. You'll remember that we spent nearly 2 months or so in the extreme fear section, which is very unusual for Bitcoin. Usually it doesn't spend that long in these extreme readings, although it did do it here from December through to January. This was an extended period down here, and the minute that we ticked into a bit of a greed situation a couple of days ago, I think we got up to like a 55. Where were we? Yeah, we got up to 55, yeah, on Monday the 8th. We were kicked right out, and now we find ourselves back in this area here again. Again, why is this useful? Because of extreme reads, we tend to get a counter move in price. It's not cast in stone, it's not definitive, but it does happen. So it's just something to add to your indicators and your charts, and that just to add confidence. More of a sort of fundamental thing, but they do show what they use to build into this indicator. And yeah, you can go and have a look at it at Alternative Me Crypto Fear and Greed Index. It will be in the description below. Thank you, guys. I hope you've enjoyed it, and I hope you enjoy the Bitcoin block halving. And yep, the inflation rate's going to be dropping. Tomorrow, I have planned a interview. I have the famous Socrates, or Tyler. He is the co-author and writer of the book Hyperwave, which studies these very specific types of bubbles that occur in markets, and they're in 7 phases. We're going to be chatting about it tomorrow. We're also going to be chatting about where he thinks the market's going post-halving, and basically this. Perhaps we'll even cover a little bit of the SPYs, the NASDAQs, and a little bit of gold, I reckon, because I know he's a bit of a gold bug too, including being a Bitcoin bug. Other than that, guys, have a great Monday. Have a great week ahead. There's a lot of opportunity out there. Remember, this is not trading advice. This is not investment advice. Purely educational and for fun. And that's that.